In this video, I am going to go over the pros and cons of SBA loans. Basically, we're going to break down the advantages and disadvantages of using an SBA loan to either start a business, grow a business, or buy a building. My name is Jonathan Fodera, and I have helped just over the last year, probably 500 clients get into an SBA loan program, and we're continuing to do so. I've been in small business lending for the past 14 years, and I can break down everything for you as long as you watch and stay till the end. This way you understand everything you need to know about an SBA loan so you can make the right decision if it's the right fit for your business. Let's go over one of the first advantages of an SBA loan. One of the first advantages is that it has the best term possible. What do I mean by that? An SBA 7A loan goes out 10 years. Why does that make a difference? Why does that matter? Well, when you have 10 years to pay for something, the payment's going to be smaller, which allows you to have greater cash flow for your business, right? And by you having greater cash flow, you can grow, expand, and scale faster, right? That's just on the 7A. If we look at the SBA CRE, meaning Commercial Real Estate Loan Program, that goes out 20 years. That's used if you want to buy a building. If you want to buy a building and you're going to occupy 51% of that building, then you want to use an SBA CRE. That can go 20 to 30 years. Now, recently, we've had a lot of the EIDLs, or the SBA Economic Injury Disaster Relief Loans. Now, those actually go out 30 years. So you could qualify for up to $500,000 over 30 years, and I think the rate is 3.75%. Right, so that is the most attractive and best rate that I have ever seen. Before we go into everything, on the 7A, that's used to start a business, it's used to consolidate business debt, and it's used to buy equipment and anything else that's going to help your business grow and expand, including opening another location. The reason why I want to focus on the 7A is to share a story with you. So we help a certain franchise called PFIT get off the ground. So it's an SBA approved franchise. And my friend Mike is looking to open 3 locations. Well, he just signed the lease and we just got him approved for over $450,000 on a 7A loan. And he said to me, "I'm so happy you helped us get this. This is going to allow us to get our first location up and plenty of cash flow to grow and expand. And then we're going to help him get the next 2 locations up with the same exact program." This program goes out over 10 years and it gives him the money for the equipment, for rent, for working capital, basically everything he's going to need, and for marketing, so he can get his franchise up and off the ground. And all he had to do was put 20% down, right? And it's going to come at prime plus 2, which means that he's really going to be paying maybe between 5 and 6% over 10 years. And when you really think about that, he's opening a business, and that business is going to create exponential revenue. That's going to be used to pay the loan back, and he's going to profit using someone else's money. That is so important. If you can use other people's money, or OPM, to grow, expand, and to make more money yourself, well, that's a win-win. So now you can see why people love using the SBA, because of the term. The next big advantage of an SBA loan is the rate. The rate is going to go, the interest rate, when I say rate, I always mean interest rate. The rate is going to go off prime plus about 2, okay? So in today's day and age, you're going to be looking at between 5 and 6%. So let's drill down and see what compares to that. Lines of credit usually run 6, 12, 18, or 24 months, and their best rate starts at 6% and goes up from there. So if you're getting an SBA loan, you're going out at least 10 years and you're going to be in between 5 and 6%. So that makes a lot more sense when you're starting a business or you're consolidating debt, because it's cheaper than the line of credit and it goes out longer than the line of credit, which is why everybody loves SBA loans. All right, so in the example of the Platinum Fitness franchise, right, they're going to use an SBA loan to get everything up and going. Once it's up and going, you know, they're only paying back between 5 and 6% as an interest rate. Now, obviously that's going to accumulate and that does cost money, but the money that you are going to make, or the money that gym is going to make in comparison to the cost, is minimal, meaning they're going to make a lot more money than they're paying back in interest. And in that regard, an SBA loan is the best option, and it makes the most sense to use and to start up the business. Now, after I got done with getting Mike that $450,000, he said to me, he goes, "I can't believe it's only 5 to 6%. He knows how much money he's going to make. He should be making $200,000 to $300,000 a year by having that one location up. And that in and of itself is worth doing, and it's going to pay for itself in the long run because you're using the right type of financing to get the business started. So many people make that mistake. So many people bootstrap a business. And I'm not saying there's anything wrong with that, but when you have the option and the opportunity to borrow money at an attractive rate to use it for growth and expansion, that's absolutely the way you should be structuring it. Now, let's look at some of the ways that an SBA loan is not ideal. Well, let's look at some of the cons and the disadvantages. One of the disadvantages of an SBA loan is there's a lot of documentation. Usually you're going to need, if it's an existing business, you're going to need your last 2 years of business and personal tax returns. You're going to need the last 2 years of financials, meaning you're going to need a profit and loss and a balance sheet for each year. And then you're going to need year-to-date financials and a balance sheet. You're also going to need a debt schedule, and you're going to need a personal financial statement. Basically, a personal financial statement is going to list all of your assets, all of your cash, and then it's going to subtract your liabilities, and then you're going to get your net worth there. The reason they do that is they want to see what your net worth is and how many assets you have to pledge for collateral, because typically an SBA loan is collateralized. That's another downside to it. And with all that documentation, it does take a while. If you're submitting all that documentation, you have to have it all together, you have to have it at your fingertips, and it has to be ready for you. When we were getting Mike this SBA loan, he basically said to me, he goes, I can't believe they didn't ask for my 3rd grade report card. They asked for everything else, and I had to laugh and shrug it off, but there's some truth in the joke, because an SBA loan, there are a lot of documentations that are required. Now, the other thing is if it's an SBA startup loan, it has to be approved by the SBA, the franchise. And then even if it is approved by the SBA, there's a couple of additional documents that you're going to need besides bank statements and personal financial statements and everything we mentioned. You're going to need the lease, you're going to need a builder's report. Basically, a builder's report is going to be a cost to build out the location, and it's just itemized so the SBA can see where the money is going. So there's a couple extra hurdles if it's a startup. Now, another downside to an SBA loan is that it does take a long time to get done. So if it's an existing business, it could go a little bit quicker. In the case of a startup, it usually takes 60 days from the time everything is in. So you need those extra documents to be in, and it's still going to take about 60 days to get pre-approved and closed and the money in your account. And it can take longer. Some of them do drag on because people don't have the right documentation, right? So that's a big downside. However, Mike had everything ready and we were able to close within 60 days. One of the things that they do ask for, and no one really tells you this in the process, is as you're sending in monthly statements, each month that passes, you have to send updated statements. The SBA needs all relevant statements and they need it to close. So you constantly have to update documents, whether it's a personal financial statement, it could be your bank statements, it could be your profit and loss, and that does add into the time it takes. So if you know this now, okay, you can be ready and you can be a lot more prepared to actually apply for an SBA loan. You know, one of the things that he said was, hey, I'm glad this was smooth, but it still took 60 days. And I said, I know, Mike, it does take time, and we handled it the best way we could to get it done and get it expedited as quickly as humanly possible. Now that you know the advantages and disadvantages of an SBA loan, the advantages far outweigh the disadvantages. So you're talking about getting the best term possible for business financing. You're also talking about getting the cheapest rate possible. Now, the disadvantages we all get. It's going to take a lot of documentation and it's going to take more time than it would to close a line of credit or equipment financing. At the end of the day, because you're getting a longer term to pay it over and it's a less expensive option, right? It's the cheapest rate you can get. It makes the most sense that if you're qualified, you should apply for an SBA loan. Now, what are some of the qualifications? And I do want to recap this because it's very, very important that you understand. You need to have at least 680 credit. And if it's not an SBA approved franchise and you're trying to start up, you're going to need a very detailed business plan. you're going to need collateral to pledge, and you're going to have to be able to show that you can afford the payment. Now, if you're an existing business and you've been in business 2 years and you're profitable those 2 years and you have all those documents, it'll be a lot easier to get done, and you can get it done faster than, the 60 days. So just keep that in mind. And here's a couple things that you should do today. 1, you should check your personal credit and your business credit. 2, you want to make sure that you have all your statements updated all the time, meaning you always have access to a profit and loss with a balance sheet. So every month you should review that on your business, and you can see the way the business is trending. This way, when you're ready to apply for financing, you can go to integratedbusinessfinancing.com. You can reach out to us and we can help you get that SBA loan. And that's our goal, is we want to make every single business integrate with us to grow their business, to expand their business, and to make more money for their business so you can provide a better way of life for your employees. That's how we want to impact people. If we impact your business is going to impact the people that work for you and the vendors that you buy from, and it has an amazing trickle-down effect. So I hope this helps. I hope you integrate. I'll see you on the next one.